Hey, how you doing? This is Steve, real estate agent, Keller Williams in the Malone Realty Group. So we're talking today about purchasing a house again and some of the things financially that you need to have done, or the top 10 things, let's say, that we need to do or not do to protect our credit and protect the mortgage as we go into the closing. Because there are some things that actually, without really thinking about them, you just think are just normal things. They could actually cause major issues as we approach closing. So we're going to break them down into three different columns, okay? First column is things that you shouldn't change as we approach closing. Two big things to not change as you approach the looking for a house and as you approach closing. Don't change jobs, don't change bank accounts, okay? Mortgage companies are really looking for their people and the people looking for a mortgage to be, kind of boring and quiet and just not a whole lot of excitement goes on. So they're looking for people who've been in their jobs and been steady in their jobs for a long time, and they're looking for people who've had the same bank account for a long time. So if you're at, we'll call it Big National Bank, if you've been at Big National Bank for a long time and you don't like them anymore, I would say let's change them, but let's change them after closing. You have a history there. The mortgage company may want to look at that history as they're making their decisions. Stay at Big National Bank until after closing. Same thing with your job. Thinking, I maybe want to change jobs. Let's change jobs after closing. Okay. If before closing, if you have to change your job or there's something that comes up, talk with your mortgage provider. It may delay things a little bit. But if you stay within the same field, it may not be as bad. Let's say you're a lawyer and you go from one firm to another, not quite as bad. Or a doctor and you go from one hospital to another, not quite as bad. If you're, let's say, a doctor and you basically leave medical and you get yourself a hot dog stand or a macaroni and cheese truck or something like that, yeah, the bank may frown upon that. So just keep that in mind as you approach closing. Really, the best thing to do is stay where you are until after closing and then make those changes. Just because the banks want to have a little bit of history to go back on. So now those are the things that you don't want to change. These are some things that you don't want to use as we approach closing. Okay, now from this point, let's say you're buying your house in a month to 2 months. From this point forward, these are things we don't want to use. Credit cards excessively. You really don't want to use credit cards at all. You're looking at a debt to income ratio when you first get pre-approved, and any kind of credit card use is going to change that for the worse. Now, paying off your credit card is not a bad thing, but using them excessively is. There's an emergency, there's an emergency. Always talk to your mortgage provider before something emergency pops up and you need to use a credit card. But really, the best thing is lock those credit cards away before closing. You don't want to leave them locked away until after closing too. But those are my Dave Ramsey routes coming out. Speaking of credit though, all right, so you don't want to use credit cards. You don't want to get your credit pulled as we go into closing. So you don't want to have any inquiries into your credit outside of, if you're going to get a mortgage, the mortgage providers are going to pull your credit. So if you get like 3 or 4 different mortgage providers to pull your credit, that's kind of acceptable, but you don't want to go to, let's say, have Macy's pull your credit, then Best Buy pull your credit, then Target pull your credit, then Walmart pull your credit, and then a car dealership pull your credit. All those make it look like, guess what, we're getting ready to add some additional debt. So you definitely don't want to use your credit in that way. So keep that in mind. Only credit inquiries into the mortgage. The other thing is furniture, and this is a mistake a lot of people make, is that they think that there's those companies that do the zero payments for, let's say, like 1,000 months kind of thing. So you have zero payments for 1,000 months. You think, okay, well, that doesn't look as bad. The reality is you have borrowed the money. You just don't have to pay it back yet, but you have borrowed the money. It has increased your debt to income ratio. The banks will look at that and say, they increase the debt to income ratio, even if it's not going to deliver until after closing. So let's say you're going to close on a Friday, you're going to get the delivery on Saturday, and you're not paying for it for 1,000 months. Still, you've incurred the debt, and that's going to reflect. And they're pulling your credit right up to closing. So keep that in mind. The other thing is car. You definitely don't want to buy a new vehicle between now and closing date. Wait till after closing before buying a vehicle. Things happen. Sometimes your engine falls out or blows up or whatever it is. Always talk to your mortgage provider to come up with a logical solution. But if you don't like your car and you want to trade it in, knock yourself out. Trade it in after closing. Before closing, you want to keep everything nice and quiet. All right. So here's some things now that you don't want to do. Okay, so we talk some credit card stuff, some credit stuff. Now here's some things you don't want to do. You don't want to make any late payments going forward. From this point forward, you don't want to make any late payments anyway. But obviously, they're going to be, take a hit on your credit. It's going to damage your debt to income ratio, or it's going to damage all the equations they use, and it's going to actually, potentially bring you down a level, and it may delay your closing. So keep that in mind. No late payments. All right. Also, this is one that a lot of people don't realize, but don't make any large deposits that are kind of out of the ordinary. I'll give you an example. Let's say you work and you make, let's say, $2,000 a week, 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 and all of a sudden you put in $10,000 just to deposit randomly. The bank is probably going to ask you, where did that $10,000 come from? Because they're assuming a friend gave you $10,000 as a loan and they're going to want it repaid. Now, your friend may have to write a letter, or I always say it's Aunt Edna. Aunt Edna gave you $10,000 because Aunt Edna's awesome, but Aunt Edna's probably going to have to write a letter saying that she doesn't want any money back. But keep that in mind. You make a large deposit, the bank may look at it and say, hey, where'd this large deposit come from? The other thing is, if you have money set aside for closing and you need that money for closing, don't spend the money that you have set aside for closing before you get to closing. That seems kind of logical, but it's happened before. We've seen it happen where somebody gets to closing and they didn't have enough money and they needed that extra $1,000. That's going to throw off all the money, and you can't really just borrow $1,000 from somebody or just put $1,000 in. That's going to delay everything for at least a week. So keep that in mind. If you have, let's say you need, let's just say $20,000 to close on a house. If you have $20,000 in the bank, leave the $20,000 in the bank. The other thing is, you don't want to have any late payments on anything, and you don't want to co-sign on anybody's loans. Okay, so again, those are things, they seem pretty logical, but we need to say them out loud before we get into the the buying process. Just keep that in mind, because you're going to be busy looking at houses and thinking about things, and you get all excited about that house you found. Oh man, wouldn't this look great in the house, or wouldn't this furniture look great in the house? And yes, it would. And we're going to buy it after closing. You're not going to buy anything or put anything on credit before closing, because if you do, it's going to jeopardize the closing date, may even jeopardize whether or not you can get the house. They may not be able to get that loan to go through, just depending on where the ratios are. So something to keep in mind. So keep that in mind as you're going forward. Always have a real good mortgage person. And typically what we like to say is the local mortgage providers, they just do a better job from what we've seen of navigating you through the process than some of the bigger national banks. You kind of turn into more of a number and you kind of get in line. Some of our more local providers are easier to get on the phone and easier to work with and get you through the process. So if you have any more questions, those are kind of the top 10 things we tell people, don't do these before buying a house. But if you have more questions about the process, want to talk about getting your next house, give me a call, 470-233-4409. This is Steve, Keller Williams, Malone Realty Group. Y'all have a good one. Bye.